The next panel discussion, ladies and gentlemen, cross-border digital finance, regional strategies and South-South collaboration. Let me welcome our moderator, Ms. Vanessa Ho, co-founder Fintech Nation, to join us on stage, please. And amongst our panelists and speakers, Mr. Takeshi Kito, co-founder and CEO, Global Finance and Technology Network Japan, Mr. Syed Musheer Ahmed, founder Finstep Asia, Mr. Pradyuman Pokharel, Chief Executive Officer, Muktinath Bikas Bank, and Mr. Tolstrup Christensen, Principal Financial Solutions and Strategy Manager, Agreena. A warm welcome to all of you, and we request you to begin this panel discussion. Thank you.
Thank you so much for the introduction. A very warm welcome, everyone, and thank you for joining us. What an energy here at GFF already. I feel like my cells are all buzzing from the crowd downstairs. So thanks for taking the time to discuss cross-border digital finance. And we're going to deep dive into regional strategies and South-to-South collaboration. And we also have people out of the South who's going to bring some of the best practices from Europe right here in India as well. Before we kickstart, maybe a quick 1-2 line introduction from each one of you.
Hi, I'm Pradyuman Pokharel, the CEO of Muktinath Bikas Bank, a leading development bank in Nepal. Thank you.
My name is Takeshi Kito from Japan. So I have been building Japanese fintech ecosystem for years. Thank you.
Thanks. My name is Musheer Ahmed. I'm the founder of Finstep Asia, also co-founder of the Hong Kong Fintech Association, and working with Takeshi-san in the Asia ecosystem for the last 10 years. Thank you.
And my name is Bo Christensen. I'm from Agreena. We are the biggest regenerative agriculture platform in Europe, and we basically help farmers obtain finance through changes of practices.
Okay, I want to kickstart the session by defining the path to interoperability, which is the biggest step to cross over before we talk about cross-border collaboration. Now, beyond just technical integration, I think one of the single most critical regulatory or policy alignment are required for two emerging economies to successfully connect their digital payment rails. I think individually, a lot of countries established that quite maturely, like in India as well. This question is for you, Kito-san. What is like the largest roadblock to aligning it so that we can connect two countries' digital payment rails?
Yeah. So in terms of regulatory blocks for cross-border payment transaction, I think the biggest challenge we are facing right now is AML CFT, because we need to comply with that regulation. And actually, in Japan, for example, we have many banks, especially regional banks, and they are start withdrawing their businesses in this area because of the rising the compliance cost for AML and CFT. So it's actually the big challenge for the Japanese banks, and not only Japanese banks, but maybe many financial institutions. And I also understand that this is related to privacy protection and also cross-border data transfer. So, and in addition to my role in GFT, and actually I am working with OECD for cross-border data transfer. It's kind of the working group. And cross-border payment is one of our agenda for cross-border payment and kind of use case. So it's the same side of the other side of the coin, the same coin. So we need to think about this anti-money laundering and also data protection and data transfer at the same time. That's the biggest challenge, I believe.
Yeah, it's not surprising that your fintech companies like your Revolut, the Wise of the world, are a bit ahead, because ultimately the central banks are there to protect the retail interests, data protection interests as well as anti-money laundering. Now we go into South-to-South collaboration, which I think is the few panels that we talk about this topic. It's key to this discussion, and it's not very well explored compared to North-South collaboration. What unique advantages do you see when emerging markets work directly with each other? This is for anyone.
Look, I think when we're talking about North-South collaboration, right? First thing, as much as there is a use of having South-South and North-South as a terminology, I think we need to look beyond that when thinking of cross-border, right? Because once you start putting certain constraints, people start providing different biases towards it. So the first level is country-to-country connection and region-to-region connection. So essentially you could use frameworks such as in the EU, you have the EU economic zone, right? Largely considered the global north to some extent. And then maybe with Southeast Asia, with Project Nexus and other payment plays, you could then have those connections with regional groups or ASEAN group, or for that matter, when it comes to South Asia, you could look at the South Asian groups as well, right? So I think that's one key element is being able to bridge regions first as a group.
What sort of unique advantages do you see when two emerging markets come together?
Scale. Also a very different understanding when it comes, they both understand the ground frameworks, right? Meaning it's very similar economies, growth status, etc., which is a lot easier. Infrastructure status typically tends to be similar, or there have been a journey. So for example, India's UPI and India stack has grown significantly over the last 15 years.
Yep.
And that's now a model for a lot of emerging economies to look at where you can build infrastructure at scale at a very comparable cost. So, but that understanding comes in because that's, okay, we have certain problems with connectivity in remote areas. How did India solve that? Or Nepal solve that for that matter, right? Those kind of things are a lot easier to connect with versus places where infrastructure and other elements may be very different and systems may be very different. But emerging economies tend to have more similar economic status, so that helps a lot, yeah.
Pradyuman, do you have anything to add? Do you work with banks from out of Nepal as well?
Yes, exactly. If the time permits, I would like to add something. Especially for remittance from India to Nepal, we see a huge prospect because close to over 4 million people from Nepal, they work in India formally, informally. And currently, last year, we have remittance from India to Nepal accounting for just 3 billion Nepali rupee in 12 months. We see the prospect of 1 billion every year Nepali rupee, Indian rupee coming to India, coming to Nepal from India. So that's a huge prospect. And as he has rightly mentioned, if we have some kind of alignment between fintechs, banks, the central banks, all the stakeholders, this figure can be multiplied, manifold. That's a huge prospect we see.
So it's back to that one big statement about scale, right? I was having this discussion with a couple of venture capital firms, and I was asking them, why are you interested in investing in all these financial health sectors, marginalized sectors, underbanked sectors? It's because these are, you invest in where you have the biggest scale, the biggest addressable market. Doesn't mean it's not done yet, means there's no money to be made. It's just you have to be there at the right time as well. I want to double down on the rural digital rollout. Rolling out digital finance solutions in a geographically challenging or low penetration regions requires more than just banking infrastructure. What are some of the more essential non-banking partnerships required to make cross-border and domestic digital finance solutions viable and scalable in rural Nepal, for example?
Actually, before delving into non-banking partnerships, the possibility for that, I think we should look at where is the gap in the market, especially in the Nepalese perspective. If you see through the numbers, we have the total GDP size of Nepal is around 43 billion US dollar. Out of which, if we see the fintech transactions, digital transactions in Nepal, that amount is around 29 billion US dollar, which is around 67% of the total GDP size. Through this number, it seems that, okay, Nepal is doing good. But there is another number which I would like to highlight here, which is very pertinent. The total number of deposit accounts in Nepal in the banks and financial institutions stand at around 60 million. Whereas the number of loan accounts, deposit accounts 60 million, number of loan accounts is just 1.9 million, which is less than 3%. You see the gap. The number of deposit accounts is, say, 100, then only 3% is the number of loan accounts. It means penetration to, serving the lending requirements of the different segments is still missing out. Especially, as you have rightly mentioned, in the rural part of Nepal, we are yet to reach out to them. So for that, I think we have to see what is the problem. not only from the non-banking partners, but we have to see what is the problem in the ecosystem perspective. So broadly, as we all agree to this, there are major 4 partners, players in that ecosystem. One is the financial core, which is obviously driven by banks, microfinancial institutions, insurance companies, cooperatives. Then there are other elements like non-banking, service providers, like power service providers, like
Or telcos
electricity,
as well.
telcos also. And in addition to that, when we talk about villages, we need to also think from the perspective of agri, input service providers. We need to partner with them also. And also, once production is done, post-harvesting management for villagers, farmers. For that, storage and cold store service providers also need to be, taken into consideration. So these are the non-banking enablers. Number 2. Number 3, fintechs. But fintech has a different role to play in Nepal because villagers, they are not literate people. They understand, they can't read. Any fintech, any transactions going into their account or the cash payment to be made to villagers through the remittance has to be well supported by local, local language, voice, audio kind of system. So that service is also needs to be there, which are there in Nepal, but not to the required level. And the 4th one is very important is, I say it's like institutional and social anchors, like local government, because Nepal has also entered into federal structure. So with local government, we need to work. Because local government, they provide incentives to farmers. So with them, we need to work. We need to work with the NGOs also. Who work for the community engagement and the capacity building in terms of agriculture, in terms of business, financial literacy. So all these are the partners through which we need to work. We means banks and financial institutions. So non-banking partners, we have to see in a whole ecosystem manner. Only then we can provide end-to-end solutions. Otherwise, on a piecemeal basis, if we work, the gap will be always there. Like I mentioned, 60 million, whereas the number of loan accounts 1.9 million. So 3% only. So there is a huge prospect.
I like the example about the farming and agriculture sector now. Over to you, Bo. You're the few people in the middle of agri-tech as well as fintech. So before I ask my question, could you share more about what Agreena does?
Yes, thank you. So yeah, it's correct. I'm the odd one out here. That's also why I don't appear on the presentation behind us on the screen. So let's take a step back. So I come from banking and fintech, but I was really happy when I heard the opening session this morning, where the speaker mentioned that okay, this is about responsibility, it's about inclusion, and it's about resilience. That was the themes for these 3 days. And I think we need to remind ourselves about this when we hear about payments, etc. And I love payments, don't misunderstand me, but it's not about the payments itself, it's about how it impacts people, it's about the value that it can create. So that's why I think the comments that we just heard from before about scalability, etc., is super important. So what do we do at Agreena? So we are a big data platform that connects farmers across 20 markets with the market. With farmers with the market. That's what we do. And why is this important? It's important because agriculture is one of the largest sectors in the world, and it's also one of the sectors that emits the most CO2. About 25% of all CO2 that is being emitted is coming from agriculture. The good thing is that agriculture can also revert that. It can actually help solve that problem as well. It just needs to have we just need to encourage farmers to operate in a different way. And that is what we do. We basically built a model and a platform that encourages farmers and incentivize farmers to change their practices, and that supports the three themes from this event. And I think that's why I'm so happy to be here, because farmers will benefit, but the whole ecosystem will benefit as well. And that's why Agreena is partnering not only with thousands of farmers across 20 markets, but we are also partnering with banks who's looking to reduce their risk on their lending portfolio, and we are partnering with insurance companies and with development banks, etc. So everyone has an interest, but it all starts with what the farmers are doing on their fields.
So you work with banks and insurance across board. You operate in 20 markets, including some more developing markets like in Europe, like Romania, Ukraine, etc. What have been the biggest blocker or inertia, and how have your team overcome that? Because I believe a lot of people here will want to work directly with all these banks and insurance, and it takes quite a lot of inertia to get them over to understand what they're trying to do.
Yeah, good question. Yeah, so we are a two-sided platform. So on one side, we have the farmers. They are the ones doing all the hard work. And then on the other side, we have all the players, the banks, insurance companies, etc., who really wants to connect and support the farmers, but they don't know how. Because farming and agriculture is a very fragmented sector. You have a lot of small farmholds, and how do you reach out to them? What we do is we are able to digitalize farming large scale. So we use satellite images, we use AI models, machine learning models to basically track every single field, what is happening on every single field. So we can see what kind of crops, what kind of crop rotation, what kind of land management is taking place anywhere in Europe. That's what we can see, and that has a huge value to, for example, banks who lends out to farmers. Yeah.
Got it. I want to move the topic to also helping startups get started on cross-border digital finance. This question is for both Kito-san and Musheer as well. What unique advantages do you see beyond just regulatory, for example, capital access or localization, or some of these challenges that Bo has also shared? And what are some of the recommendations you recommend for them to overcome these hurdles if they want to go from one market to the next 10, for example, in the emerging space? Musheer, Kito-san, anyone?
Yes, that's good. Okay. When we're looking at startups going overseas, it's one of the things that we do as Finstep Asia, and we started off with helping B2B Indian fintechs looking to get into Hong Kong and Southeast Asia, right? And now that's a cross-border market where we are aligned in terms of the demand for B2B fintech, but data rules have been evolving, right? So when you are moving, number one is staying aware of what the local data rules are. So you'll have to localize the data for that country, right? Now, certain regulators allow for using cloud, but then again, they require the data centers to be in the local country. Few regulators, even less so, would allow for the data centers to be in an overseas market as long as there's access, almost near instance access that the regulators can get whenever they need, right? So number one is ensuring you know your data rules very well. Secondly is cybersecurity. The protection thereof is going to be very important for user data. Now, number three becomes finding local partners who may not be a competition with you, but would be synergetic with you, right? So it could be telcos, it could be a conglomerate which is locally based and has a deep network, but they don't have fintech services. That's an easy way to get in, and you can then leverage off their existing regulatory frameworks for aligning yourself. The final point that I would like to say on this before Takeshi-san adds is for startups with regards to open data and open finance, things are opening up globally. India has been one of the leaders for many years now, but you now have strong open finance frameworks also in the UAE. Hong Kong has it, Southeast Asia also, a few countries have it, and they are more or less aligned in terms of the way that data can be leveraged for reaching multiple markets and consumers. And that is going to be a key element, is going to be being able to participate in open finance initiatives, which will then again give you leverage of partners.
But before moving on, you mentioned about the the regulatory hurdles, working with non-banking players, but all of these might take a lot of time, like licensing-wise or onboarding all these non-banking sectors in going through the whole sales cycle. How do startups survive if they're going to take years to get certain approvals? Are there things that can be done to expedite certain processes?
I think the two elements. One is don't always look for a license. Okay, so everybody thinks you need a license in every market you go in. Even a Revolut can take 3 to 4 years in a major market, right? So it can take a long time, and you need to raise a lot of capital. You also need capital to be maintained. So don't always look for a license, look for a partner, right? It's not a bad thing to white label your solutions. I think that's one good way that you can actually be effective. And while you are white labeling your solution and partnering, that gives you time to figure out, is this market for you? Second, are you making enough money here to justify? And then you can start applying for a license in parallel, which would then, will be more appropriate for you at that stage. I think that's one good way of running that versus trying to get a license directly.
Yeah, I think I have one example from our portfolio at Fintech Nation to share. Time Bank is quite sizable, about more than 15 million, now probably 17 million customers in South Africa as well as Philippines. They want to go to Indonesia, and instead of waiting for a couple of years for OJK to grant the license, they work with another portfolio company of ours called Finfra, who is already a licensed lending player to get their operations started while they are applying for their license to do this independently. So that speeds up their scale-up process, especially when time is of the essence in the startup race as well. Kito, anything to add on companies that are in the early to grow stage trying to go across border in digital payments and finance?
Yeah, so a little bit step back and let me share my experience in the Japanese market. So I think the market or ecosystem itself needs two key elements. So one is accessible market with rapid adoption, and the second one is capital access. So what happened in Japan was, in Japan, fintech and the payment startups didn't have enough access to the capital. So actually in the payment space, we have no unicorns so far. And also it takes a long time to penetrate the market in payment in the Japanese market. So unfortunately, we don't have cross-border payment unicorn in Japan. But what's happening right now is overseas fintechs, payment unicorns coming to Japan, and some companies are trying to acquire Japanese fintechs with a small scales, because it's a good opportunity for them to acquire startups. And they also already have the market access and a relationship with the regulator and the partners in Japan and the banks as well. And also, the companies, when they expand their business to Japan, they will face the hiring challenge, because it's really hard to hire Japanese local talent who can understand the fintech ecosystem and the finance, and also can speak English. So we have a language barrier as well. So again, the capital access and also the market expansion or adaptive market is the challenge as an ecosystem itself.
Yeah, can I just add? So we are operating in a non-regulated market. It will become regulated at some point, but as you know, the private market is always moving faster than regulators. And what regulation actually does, it can be a bit of a pain once in a while, but what it actually does is it adds trust, and that's a super important thing, especially when you're trying to access a new market or develop a new market. So what Agreena has been doing for the last 3 years, we've been getting a verification that actually sort of gives our platform the most sort of the best stamp that we can find worldwide, showing that our models, our data, the way we collect data is best in class. That has taken us 3 years to get this verification, and we're the biggest platform in the world that has this verification now. And that just shows that even when there is no regulation, it's not just a good thing, it is actually something where you often try to find alternatives because you don't have this regulation to sort of lean up against. So it can be a pain, but it's also, I think, it has a purpose.
Yep. I think speaking of innovation and security trade-off, which you mentioned, emerging markets are accelerating digital finance adoption, but they face a lot of cybersecurity and fraud risk. In your experience, what is the best way for institutions to balance the need to accelerate innovation, do pilot tests with smaller, younger startups or tech teams, while also maintaining the need to have robust security and consumer trust? Pradyuman, would you like to start first?
Actually, cyber security, I think, is one of the biggest problems when we talk about technology, when we want to provide the seamless service to our customers. For that, we need to have a very robust system, and it requires also a lot of investments. So we need to be very careful for that. I'm not, in fact, a technical guy, but from my experience, what I would like to say is. Mr. Bo mentioned, for the risk management perspective, it's very important, and we have to have an ample investments for the purpose of mitigating the risks from the cyber security. That much I would like to say.
So it requires a lot of investments. How do you decide where to invest in, and how does this change over the years as well?
Especially if we talk about Muktinath, in our experience, we have, in fact, instead of reinventing the wheel, we have done the collaboration with the partners, especially the fintechs which are in the cyber security field. With them, we have partnered with, and through that, we have managed to mitigate the risk associated with cyber security.
Kito-san, anything to add on managing the speed of innovation with consumer trust and protection?
Yeah, so definitely the cybersecurity, and it's the crucial thing when it comes to the innovation. And so let me share one interesting phrase we had 2 weeks ago in Bangkok in our panel discussion, because the one of the panelists says that the scammers and the hackers, they are the early adopter of technologies. So in that sense, financial institutions and regulators should also adapt the technologies as fast as possible. But actually, they don't have enough resource and talent to adapt the technology. So they should collaborate with the tech companies, startups, to adapt the current technologies and understand what's going on.
Got it. Musheer, do you have?
I'm sorry. I would also like to add one very interesting example. Case study in our bank. Usually in Nepal, what we have observed during the festival seasons when there is a long holidays, these cyber attacks are more prone to happen.
And now we are approaching Diwali here as well.
Yes.
So okay, go on.
So to mitigate that risk, in fact, not only in our bank, we have an association of development banks in Nepal also. I'm the ex-president of the Development Bankers Association in Nepal also. So we in fact, we had a kind of system in Nepal, both aided by technology and as well as manual. We monitor the transactions every day. Our information security officer, our IT, our risk management guys, they monitor the transactions, the business, the accounts in the bank during the holidays also. That is also very much required. That has, in fact, helped us to mitigate the risks. Earlier, there used to happen big problem, scam, in fact, and financial loss for the banks. But now, because of that, the risks have been mitigated. So I'm trying to share my experience.
So you have manual processes, and how much of that do you eventually think that you can move to AI? Or do you think that there's still a need for manual intervention, especially at peak fraud seasons?
Yes, you are very right. Manual intervention is there, required, but equally AI-aided, processes also needs to be implemented, adopted by the banks and financial institutions. We are gradually moving towards that direction also.
Musheer, you have something to add, or any
I was
case
just gonna
studies
add a
from your
couple of
portfolio?
things here. So we did a project for the Alliance for Financial Inclusion recently, where we did a diagnostic assessment of 7 South Asian countries, including Nepal, Bangladesh, Maldives, Sri Lanka, Pakistan, and Bhutan. And we also looked at insights of what's happening in India, right? And one of the key things when it comes to cybersecurity is you're both alone but also together. And I'll qualify that. What I mean by that is you can't give up the responsibility to saying everybody is going through this, so hey, it's okay. So you have your responsibility towards your users, be it institutions or end consumers. So that's number one. But you're also in this together because it's a bit like if you were in a neighborhood and there's a lot of burglaries happening across the neighborhood regularly, right? It's no longer just one person's problem, it's everyone's problem, right? So that's when you have your neighborhood night watch, right? That's an analogy that I'm trying to make, which is more simplified, but essentially this is where banks and fintechs have to be more open to collaborating, where you are sharing information, can be at a non-personal data level, for mitigating and saying what are the patterns, right? You can talk about AI and other elements, but state one is being aware of it. The second thing that was very important for us when we looked at cybersecurity as one of the key things, but one of the other elements was about literacy. And when I say financial literacy, it's not to do with an education level of a person. It's just about awareness about what can be done and what cannot be done, what should you do, where should you click, like clicking on URLs on your phones, etc. And you'd be surprised the number of people we had instances, without naming a country, where we were told about senior bankers who got greedy during a festival where they got something saying, here's your free gift, whatever. They clicked it, they got phished and hacked completely, right? And that impacted their institution as well. So a lot of times the attacks are on these, in terms of greed is the biggest factor actually, right? So you need to be very aware that if it's too good to be true, it's too good to be true, right? And so literacy campaigns need to be very pervasive, need to be across, and there needs to be a partnership with local institutions across. The governments are very important, especially in emerging markets. And one of the ways is the telcos become very important now, right? Because a lot of this is going through now. Airtel talks about, we will identify these scammers beforehand. Now with the iOS update, whenever I'm getting a new SMS, Apple is asking whether this is a known number or not, right? For example, certain times I may get from an exchange or other saying, oh, your account has been logged in, click here if it hasn't been, it's not you. Whereas I don't have an SMS two-factor authentication, I have an app authentication. But I may click because it says whatever the name of a bank, say ICICI, as an example. So the telcos become very important in classifying the SMSs and also blocking. That's going to be a very important element. That's the biggest source is SMS scams, and being able to restrict that at source is going to be very important.
Thank you, Musheer. I'm down to my final questions. Now, let's talk about benchmarking success. If we were to convene this panel again in 3 years' time, what single measurable metric related to cross-border digital finance should we use to determine if our collective regional strategies have been successful? Maybe I'll start with you first, Pradyuman.
Yeah, I was just talking to my panelist here. We were having the break. I was talking about why can't we have remittance from corridors like Japan, Hong Kong, Korea to Nepal. Like in Nepal, we have major remittances coming from Middle East, Malaysia, but not from Japan, Hong Kong, and Korea. And we delve into the problems. What is the problem? The problem is the higher cost. If we see the United Nations SDG goal of reducing the total remittance cost to around 3.5% currently, which is at around 4.5% or 5% through these corridors. But from Middle East to Nepal, if you see the cost percentage, it is below 1.5%. So if we can do that, if we can keep a benchmark of reducing the remittance charges to, say 3.5% as per the UN, SDG goal, then I think that will be quite handy for motivation for people to send remittance from developed countries to Nepal, Japan, Korea, Hong Kong, or even Europe, Australia. So that benchmarking goal can be one of the agenda which we can talk, and we can look how we can achieve that.
So you talk about reducing costs. Before I move on to the other speakers, you run a bank. It's also about profitability. So how do you manage reasonable or lower cost of remittance with the bank's P&L as well?
Actually, the charges are not only one of the components for contributing towards the profitability. In banks, if we have the float, if we have the deposits which are of lower cost, then that also contributes to the profitability of the bank.
So look at other levers where you can monetize a bit further than remittance cost. Okay, Kito-san?
I think total amount of digital payments, cross-border payments, because recently cross-border payments...
Sorry, total amount of cross-border payments and flow.
Digital payments, because now the payment method is getting more diversified, so which can include the wholesale retail, of course, and also digital payments via CBDC and stablecoin, etc. So it's also need to understand what kind of payment method is happening, and it's the kind of dominating the market. So that their KPI is also important. Yeah.
Okay, so any form of assets to move more money around. Musheer, any single form of metrics to benchmark success?
I was going to say volumes of cross-border transactions, but Takeshi-san was ahead of me on that. I would say that we need to look at the number of cross-border initiatives, networks, right? Basically, which connect multiple. So now, like with UPI International and NPCI International, you have a lot more bilateral ties in South Asia and overseas for UPI. But where can we get more networks like Nexus and others? I think it's going to be important. Talking about Hong Kong, Japan, like for example, over last week, Japan happens to be one of the biggest markets for Hong Kong tourists, etc. They have now integrated what is known as the Octopus payment, one of the world's first travel payments, which can also be used for short-term payments across Hong Kong, with the Japanese payment ecosystem. So people can just use their Octopus app instead of having to use local payment rails in Japan. So those integrations, I think if we can say from a south-south perspective as such, if you can have 25 integrations in 3 years from where we are now, with maybe a handful, that I think is going to be a good benchmark. Yeah.
That's a very good goal. 25 bilateral initiatives across 3 years. Yeah. Let's see. I believe we are on route for that. Bo, how about yourself? Any single metrics, maybe more for the emerging markets in Europe that's relevant for you?
Yeah, so I would rephrase your question a little bit, and I would turn it into what would really help Agreena 3 years ahead if we had solved a certain problem, and that would be having easier ways to do KYC, so know your customer, and do payments to farmers. So we pay thousands of farmers in 20 markets with thousands of banks, or hundreds of banks, different banks, and we need to make sure before we pay the farmer any money, we need to make sure that the farmer is who he says he is, and that he's not on a sanction list, etc. That actually requires quite a lot of work on our side at the moment, and we are really exploring how we can improve that. We have also experience with blockchain, doing payments through blockchains, etc. But that is definitely something that would help us if we could do that much easier, much faster, and much more digital.
Okay, so for you, it's not so much a single success metric, but the one lever that's going to expedite this whole, not so much an innovation, but adoption of Agreena and technology for, I think not just for financing for farmers, but for any banking services, any financial services.
Exactly, and also just to remove some of the pain from the farmer's point of view, because we're asking the farmer to deliver a lot of documentation, right? And then if we pay through the regular banking network, we pay quite a lot of fees, and that is being subtracted from the income that the farmer is getting. So we're trying to optimize this as we go along.
Okay, so I think in summary, and conscious of time as well, we discussed a lot about regulatory hurdles, but how that is progressing with a lot of bilateral initiatives. We talked about localization. We talked about why the emerging markets are still important because of the scale it brings to both investors, but also companies, and how companies can balance innovation with consumer trust and cybersecurity risk as well. If you have any questions, feel free to reach out to the speakers on LinkedIn or to their team. And thank you so much for sharing. Let's put our hands together for our lovely panelists.
And thank you for wonderful moderation. Thank you.
Thank you.